I've got an open-ended question for you guys. How do you make money in resources investing? Incidentally, there's a lot more, like a much larger list of ways you can lose money investing in resources stocks than there is to make money. But yeah, the 4 categories that I have is...
Righto, money miners. Today we are talking about multiple mining companies, and doesn't matter which bloody mining company you are. CRE Insurance is your friend to sort insurance out for you. Insurance is not a taboo word. Is it, boys? Because you call them, they sort the whole thing out for you as the trusted broker.
Peace of mind. That's what insurance gives you. It's like, it's the thing you need when you're up shit creek.
And if you feel like you're up shit creek with insurance, CRE will give you bloody 16 paddles. Like, mate, they are the team. They are African mining insurance specialists. They're located Sydney, Brisbane, Perth, and
Orange.
So, mate, just get them to run their eye over. You might have too much insurance. You mightn't have enough. You might have bad insurance. The wrong one. They'll tell you.
The review's free?
Yep, review's free.
Unbelievable. Go CRE.
I think it still is. What do we got? So we got bloody Genesis Quarterly out yesterday. You got Aurelia.
Yeah, I'm going to talk about Aurelia, mate.
And we're going to talk about
CRE and Orange. Yep.
And we're going to talk about Goldfields. Bit going on there.
Is it bloody? Have you sniffed it out, or is it public?
It's pretty public. It's pretty public. Although it's not as widely reported as maybe it should be.
Right.
Let's start with...
Left myself in suspense. Right.
Genesis.
Jesus Christ, look at the bloody... She's flying. $4.40. Ding, ding, ding for the LEGC Gold Fund, which by rights should be going off based on the last year. I hope it is, unless she's trimmed too early. So cash holding increases by 111 million to 348, and they produced just below 60,000 ounces. But now I'm pretty sure the cash and bullion increased by 99 million Aussie quarter on quarter to 321, but it's they got the liquid investments of 28 mil. So, because remember, they hold 7.3% of Gorilla Gold, which has a 300 mil market cap now.
Wow.
So that's worth about 22 mil in itself. And quarter on quarter, it's gone from 26 cents to 48 cents based on March 31. So that's where a bit of extra money's come in from the value of that liquid investment.
Matty, I can see in the show notes here you've written in about size 36 font. Are you extra excited about the cash build?
I don't know why I did that. It must have just been the way my computer screen was.
$100 added for the quarter is not bad. That's something to get excited about.
Yeah, no, they've done bloody well. So average sales price of $44.96. They did have some Fords to deliver into, but they're relatively so they 4,500 were delivered in at $36.49. So pretty much they've only got 4,500 a quarter for the next two at 3,700. So they're pretty close to fully exposed, about 7% of production. And they do have some small amount of zero cost collars to deliver into at 42.35 from December 25 onwards, 4,500. So, but it's a small amount of production. So you'd say 90% unhedged. So
isn't it funny? You put those collars in kind of thinking, the gold price won't surpass that. And then
yeah, I know.
And like it does, yeah.
40,
anyway.
Yeah, 42, like 4,200 collars. They're like, of course you bloody would have back then to get a downside of 3,500. But it's just changed so quickly. So yeah, again, they've reiterated their guidance, 190 to 210. You can see the growth profile that is ahead of them with the Laverton mill getting turned back on. And I'll go through what's sort of coming up and what is potentially not 2 to 3 years as initially anticipated. So Gwalia, I think a lot of this was flagged in the previous quarter. So they got 25 and a bit thousand ounces at 6.2 grams mined there. So the ore delivered was 129,000 down from 182, but they were progressing through a selective portion of the mine, which was flagged in the previous quarter. So, but grades bloody positively reconciled. Ulysses, so ramp up stopings continued there. So they got about 4,000 ounces at 3.4 grams from there. You do see their reserve grade at Ulysses is 3.7 grams. So the previous two quarters have been below that, but I would, looking at it was the highest amount of jumbo development meters in the past year for this quarter. So I would anticipate there'd be a higher percentage of development ore to stoping ore. Hence the reserve grade might be a bit lower. But yeah, like Admiral and Hub, like bloody, yeah, good little pits. Like Admiral's 1.8 grams, Hub 3.8 grams out of that open pit. So it's a good little bloody sugar hit there. And their studies are actually planned to go look at underground at Hub. So unless there's some bloody supergene thing that cuts it off, you think if you get 3.8 in the pit, yeah, underground might be all right. So we'll keep posted there. Leonora Mill, a bit underfed. Probably because of Gwalia, a bit less dirt coming out of Gwalia and everything. So 304,000 tonnes. So remember, it's a 1.4 million tonne per annum mill. They did say there was a microburst storm. Microburst.
I've never heard that word.
Microburst. It's a new one. It's in bloody quotation marks. So that there was a couple of days power loss and a bit of damage to infrastructure, but they've got the flexibility now that they can just truck the shit to Laverton and send it to the Mount Morgan's mill. So that's where the flexibility of these two mills can really come in handy, because they can just divert trucks straight away. Like Hub and that, they can send them both directions. Going to come in handy for like your shutdowns and everything, because you can just throw everything up the other end. And so Laverton, most of that was their existing stockpiles processed there, 784,000 tonne at 0.9. They have got a bit of third-party ore coming from Bright Star and Coomarina. So you can see here for the Laverton mill, the restart. What's it? So Laverton mill, form is temporary, class is permanent. Doesn't that sound like a Nike ad?
I just read that.
Like, form is temporary, class is permanent.
That's quality.
I could. What is a good Australian brand that needs my voice on TV ads? Form is temporary, class is permanent.
That's a hell of a caption for a figure in a mining quarterly.
So now Tower Hill, it's progressing to plan. So it says they've got the Heritage Section 18 approval received. Environmental wise, they've got the clearing permit application for stage 1 that's submitted. Then you've obviously got stage 2 as well. They're dewatering it. The rail shortening, so it's not a diversion anymore. They're shortening it. Targeting that agreement for June quarter 2025, delivering first ore FY28 and development in FY27. But joys of having multiple assets, because if you look back, 4th of April 2023, like it said, Tower Hill approvals and development timeline would be 2 to 3 years. Same in the Diggers Prezzo 2023, 2 to 3 years. Well, we're at 2 years now, and the rail shortening agreement hasn't been signed yet. So the 2 to 3 years approvals development that they said, that wasn't for first ore, that was approvals development. That's probably going to end up, as anticipated by most, probably 4 years. If that goes to plan. So, but when you got multiple assets, multiple plans, the focus isn't on that sole asset as much. So that's where it gets a bit, you're protected in that sense a bit. So
you also reckon these guys are pretty good at underweighting expectations as well. They don't want to get people too pumped up about it and beat those expectations.
Well, and look at Evolution, Mungari. What that commissioning was 10 months ahead of schedule and on the budget?
9 to 6, but it was they got lucky on the timing of a few things. Kind of, a few things kind of got in before certain holiday periods. The long lead things all just lined up, and it all came together cheaper and faster. Yeah.
So look, there is potential, but it's looking that would have been blown out. It was a bit probably bullish initially, I thought. You can see why they paid 53 mil at the time they paid for that Bruno Lewis and Rayside projects. They've just done some reserve, a bit of infill drilling there for the reserve, and like 5 metres at 27.8 grams, 15.5, 8 at 15. Like that's an open pit. So there's some and that, because remember that's the one they got out of Kin, where they just took that one right in the middle and just like, we don't want any of the rest of it. We just want that one. So you can probably see why. So, they're bearing the fruit of their growth plan at the moment, I'd say, with getting that Laverton mill turned back on. Yeah, I think at Jupiter, that's scheduled to start mining in FY26, so that'll be a good chunk of the feed for Mount Morgan's. But I'll be interested to see if they're going to need more or.
Did you hear Fisty's comments in JD's interview?
No, I didn't.
He said, yeah, like, you know, kind of he played down the potential of a tie up with Volt at the moment, but he sort of said, look, I think where they could use a deal is to add high grade ounces to Laverton, and he specifically listed Focus, Magnetic, and Bright Star. Yeah. Now, Focus's Laverton project is publicly for sale. That's out there. They could buy that. Yeah. Volt is publicly for sale. That's out there.
Magnetic publicly has a data room.
Yes. Yeah.
What about tons? Was he more focused on getting high grade?
Yeah, just high grade. I mean, you've got Jupiter and all that sort of stuff. It's just like, can you add some sugar to make that grade go north? You know. I don't think he has a concern about the free cash flow in this gold price, but it's just, you know, a bit of sugar can really move the dial there.
Yeah, and I think between like Bruno Lewis coming on, Jupiter, like. Yeah, you'd think it's just trying to make sure they got 3 million tonne to put through it, and I think because I think they'll get to if it's all open pit, they'll probably get 4 out of it. Like there's a lot of potential there as long as they got enough feed. So hence the ore purchase agreements. So we'll find out. I'd say all the stuff that Bright Star's up that end with. I know there's like undergrounds going in and stuff. Like, it'll be bloody all going there. I think they'll be taking every bit of dirt they can.
And that's the other thing. I mean, they could, like Bright Star, now that they've got, you know, sandstone and that's a priority focus and all that sort of stuff, they could recycle capital by selling that Bright Star project to if that was of use to. But you know, all of those things are kind of on the table, I think, if high grade ounces really do move the dial a bit, and if Genesis kind of want to do something that's not Volt, that's what they do.
Yeah, it doesn't look like it's gonna. Yeah, who knows? Then I said, fucking Ramelius Spartan happened a week after I said that wasn't going to happen. So, don't listen to me. Anyway, right, let's go over east to God's country, New South Wales, Aurelia.
I've got an open-ended question for you guys before I kind of talk about Aurelia, the company.
Dangerous for me.
Just keen to get your unprepared responses to the question too. How do you make money in resources investing?
Are you kind of referring to the different styles that you can play in the arena?
Interpret how you
as in buying the stocks.
Yeah, how do you make money?
Find which one's going to be a self-fulfilling prophecy that will just go up because you got good management and one.
Yeah, back management, pick the commodity cycle nice and early, get on like a sort of tier 1 or a big discovery nice and early. Some people can pick catalysts. That's a bit harder, whether that's M&A or you know, other types of deals and things like that.
Probably look at the ones that are the most
bombed out,
less susceptible to missing guidance, the most like the least riskiest to actually hit it, and the ones that have some upside somewhere in whether it's exploration or something to give you a statistical chance.
The ones that are completely bombed out, like a Spartan, where there's a recapitalisation and all these sorts of things, and maybe there's a part of the story that was underweighted, whether that's new management coming in, whether that's a discovery where the futures can kind of change.
I think
so do all of them, you'll make fucking millions.
All the way easier on paper than in reality.
Yeah, I think you touched on all the categories there that I come up with. Incidentally, there's a lot more, like a much larger list of ways you can lose money investing in resources stocks than there is to make money. But yeah, the 4 categories that I have is being early in a world-class ore body. So you ride the Lassonde curve to a takeout or production. You know, this is the Geo Alpha kind of style of investing. A lot of that cohort, they sift through the discovery announcements, you know, every morning. Like looking for the next big thing. Number 2, be early to a commodity cycle. Buy the stuff that is out of flavour, like gold stocks were 2 years ago, for example. Then you be patient, you let cycles run their course. This is, you know, the contrarian investment style, which works really well in cyclical industries. Number 3, reading the M&A tea leaves. If you know a company needs to buy a certain deposit for its nearby mill, they're probably going to have to pay a premium for the ability to do that. This sounds easy in practice, but it's much harder to actually make money from because timing matters a lot. Number 4, picking turnarounds. I have a lot of respect for the people that are good at this. It's very hard and it takes like real skill. Like what's a turnaround play? like we see all the time in our industry, mining companies can find themselves in dire situations. They're royally cooked, and sentiment about them couldn't be any worse. And what causes them to be royally cooked could be that sometimes they've got too much debt. It could be that there's a bad hedge book. Sometimes poor operational decisions by the management team in place. Sometimes the rocks you thought were there aren't as good when you actually start mining them. Sometimes it's out of your control too, like a weather event or a government regime shift. If the reason the mining company is cooked is the rocks, then you're screwed. But if the rocks are good and there's potential for it to turn around with better management or a recapitalised capital structure, those are turnaround opportunities. You can think of a couple of like successful turnaround examples. I'd put Aurelia in that category. I'd call Metro Mining in that category. Think of like the stories like investing in St. Barbara at 4 cents in 2014. Or,
as long as you're sold.
Yeah. Like Resolute up until, shit hit the fan recently there. I'd argue Oz Minerals at one point was a bit of a turnaround. It certainly helps if you get, I actually don't put Spartan in the category purely because having a discovery isn't a catalyst you could have controlled. They did change strategy. They turned off the mill. There was management change, all those things. But you could have bought it cheap, but you couldn't have predicted that catalyst because it was a discovery in some ways. But yeah, maybe they disagree. I'd put Pilbara in the category, and Pilbara had a commodity tail cycle on their side, and that's another kind of form of catalyst too. But
I was going to say, yeah, your second point, the commodity cycle and fore have a lot of overlap in the behaviour of companies.
Totally. Those are the broad categories. Some other people probably have a few other strategies of ways to make money in resources investing too. And if you do, and it's a different one, then leave a comment. Let me know what I've missed. But
buy this.
Buy the promote, yeah.
So I take it you're keen to talk about turnarounds.
I do. To be a successful turnaround, you need the catalyst that turns things around, right? Sometimes that's a recap to pay out all of the debt that is overburdening their company. Sometimes that's a change of management. Sometimes it's an expansion project to lower unit cost, raise production into a commodity tailwind. What's more interesting in turnarounds, they're usually small caps. They're usually like sub $200 million market caps. They maybe have one or two assets. They're in that kind of unloved territory, and so they don't have a particularly institutional following. But if they turn it around, they graduate to a size that gets institutions looking at them, and all of a sudden they're in the indexes, and you can sell your bags to the instos. Happy days, right? Aurelia Metals came up in JD's interview with Fisty, and which went up on Friday. Since Friday, the stock is literally now 35% more expensive. So well done, Fisty. And Aurelia fits the turnaround category perfectly. We've hashed out the reasons why Aurelia got itself into a predicament, a dozen times on the show before. Buying Dargs for $200 million in December 2020, largely debt funded, was its undoing. And you can see in that share price chart there, 84% of its equity value just eroded over the following years after doing that. But over that time, they did keep moving their Federation project forward, and that was their development growth project, which is actually a good project. The management and board of were there when the Dargs deal got done. They got the boot. There's a whole new board, new MD, new executive team that largely got put in place around the rock bottom of end of 2022, start of 2023. In fact, with the new management team in place, they then put to bed the balance sheet concerns too, with a $40 million capital raise at 9 cents in May 2023. Its low was 9 cents. It's now trading at 29 cents. That was the turnaround catalyst. There were three at once, right? New team, better balance sheet, proximal development of Federation.
Yeah.
So
why is Federation is that that's going to be their flagship effectively?
This will be their core. It is their core asset.
Yeah.
It's a polymetallic VMS, a kind of classic Cobar style deposit. It has, a vertical orientation. I'll flash up its reserve. 2.4 million tonnes containing 8.7% zinc, 5.1% lead, 0.3% copper, 1.4 grams per tonne gold, and a little bit of silver too. Federation is entering its first full year of commercial production now. I think initial it kind of kicked off around July last year. So it's it's moving forward. It's ramping up. But interestingly, they are mining it from the top of the ore body. You can see where development is as at this month here. Just in the you can actually see the development underground development there on the section.
Are they and that 1.4 gram gold, like say they're getting half of it into concentrate, it's worth a bit of coin these days. Like it's
all the other metals too. I mean, I think it's like a 5.5 gold equivalent.
Yeah.
But I mean, these polymetallics, you should think of it in like $1 per ton net smelter return.
Yeah.
Which is pretty attractive here. The decision to mine it from the top down meant that ore gets to the mill sooner, lower upfront capital, faster payback, and it meant that they could keep their capital structure of the company intact since that May 2023 capital raise. And underpinning the low capex startup is also the fact that Aurelia has an underutilized processing facility just 80 kilometres down the road at their peak mine, so they can just haul it there. They didn't have to build a mill, and they actually just got approval to start hauling 600,000 tonnes per annum on the roads from Federation to Peak instead of the 200,000 tonne per annum limit before. The thing that Fisty spoke to in your interview, JD, was the cash generation that the company is on the verge of having. From FY26, they transition into thicker, higher grade stopes at depth, which carry the strongest margins and underpin the mine's free cash flow generation. And you can kind of even see it just on the section there, right? Like all of a sudden your mining shapes, which I mean, you can just think of the benefit that has from a free cash flow generation potential. So Fisty's estimate was $100 million of free cash flow per annum on an EV, like an enterprise value of $250 million. Unfortunately, the market has clued on a bit more now, and the EV is no longer $250 million. It's closer to $400 million. But I really do love appreciating a turnaround. And I think there's a lot to be admired about a company that can turn things around and really move the dial. Like you've got an operational plan that works and it creates shareholder value. I think there's a lot to be admired about that when it's pulled off. Aurelia is frankly, they're on the cusp of really reaping the reward from its turnaround. Whether or not it's still cheap or not, you have to make your own mind up. But regardless, it's embarked on this path of a turnaround, and to date, it's been an impressive thing to watch.
I'll have to read up on it. Are they obviously going top down now? Do they talk about paste or anything? Or
they basically got to experiment with the paste early and kind of the pay system's been tested and all that sort of stuff.
Yeah. All right. So they're obviously, I think before they were going to go like bottom up, like not when they say bottom up, you don't go to the bottom. Yeah. It's just like you work on top of the paste and everything. So it's because you can do a lot of work in the other stopes, drilling them out while you're backfilling. Yeah. But for top down, like that's the best way to manage stress, because you always got a stress shadow top of you because it's being excavated.
Gotcha.
And it's, as you said, it's quicker because you just start because you got to develop 3 levels down before you mine and start, whereas you just start taking ore as you go.
Yeah.
But it can be a bit slower because you've got to wait for that paste to cure before you mine under it and stuff like that. So there's pros and cons.
It's a trade-off, and in this case, they made the trade-off based on the reduced upfront capex. Yeah. Shout out to young fella Lucas. He wrote this excellent note that he posted on LinkedIn together with Fisty's comments. Inspired me to take a look at Aurelia again. Lucas's note. He writes this. He says, Aurelia is transitioning from a complex story into a cash machine, and the market is yet to reprice it accordingly. Unfortunately for the punters and out there reading Lucas's note, the market has repriced at 35% higher already since then. So
I reckon Lucas has made some cash.
Hope so. Yeah, he deserves
Lucas
it.
moving the market.
Yeah. Oh, it's I think one thing we didn't mention about turnarounds. Oh, we sort of did about, like you mentioned, because they sort of new management team and everything. Like even though they're not publicly listed, like K-Drill were the same when Ryan O'Sullivan rocked up. Like
he's a turnaround man.
Yeah, like they just injected him. Like obviously the sample management friggin' standards went through the roof. Like just company morale. And look at how many RC and diamond holes they're drilling these days. Just punching them in the goldfields
in all sorts of directions, mate. And Rhino, he just when you're in his presence, you kind of just fall into line. I've learned, like there's like, I don't know. You just want to say yes to him no matter what. Like, he's just that kind of figure.
Yeah, and you will say yes to everything because you trust him that he won't make you do anything stupid.
No.
Like, because he'll just never tell you to jump off a cliff.
No.
Like, it's you get into the Rhino Sullivan vortex of trust.
If you haven't met him, I think you need to make it your mission to meet him and just understand what we're talking about with this vortex, because the net effect of it is more drill meters, faster drill meters, better workers who are on those rigs getting the performance you need, and
they never quit.
Never quit. The quality of that sample management, elite.
Yeah.
Your geos love them.
Just reliable.
Try not, when you get in the vortex, just try not to kiss him. Everyone tries because they fall in love with him. Go K-Drill, go Rhino Sullivan. JD, what have you bloody found out with Goldfields? And it's not Gold Road related?
Not Gold Road related. We are going to Ghana for this story, guys.
We're going to go to Ghana.
And then the story sort of expands from there. But Goldfields have had to hand over the keys to their Damang gold mine to the Ghanaian government. And just a quick by the way, Goldfields are now a US $22 billion company. Their market cap has nearly doubled since January. So they're on a tear. So that's a talk to the gold price.
Yeah, right.
Even amongst the majors.
So I gather it wasn't like they just didn't voluntarily rock up, oh, look, we're thinking we might give this back to you. I assume it was forcefully requested.
You're quite astute, Matthew. It doesn't tend to play out that way. I'll give a bit of background to the mine to sort of start this story. So Goldfields have majority owned Damang for over 20 odd years now. Government has a 10% free carried interest. The mine on a 100% basis did 135,000 ounces. So it's pretty small. It's a bit over 5% of Goldfields' total output. Mining ceased through the year of 2024 last year, and they moved to treating stockpiles there, but still did pretty decent cash flow, as you'd expect with mining costs turned off. Free cash flow of $140 million.
Did it stop year. Because the ore body was extinguished, or what did?
So there's a bit to it, and it's kind of complicated. I guess I'll get there in a second, because there's still 3 million odd ounces in resources, but no reserves given situation. They don't have the confidence to put things into reserves. But essentially this and in the broader area was mined for a long time from the 19th century through to the kind of 1950s. But modern mining restarted here in 1997 with a mining lease, the license being granted just before that. Now, production through the 2010s kind of waned a little bit, and then Goldfields came out with this big reinvestment plan, gave it a kind of 8-year outlook, which is more or less where we're kind of at from 2016 to about now. And then in the early 2020s, so 21, 22, they start talking about studies to try and extend the life, as well as maybe looking at selling the project. Now, production had been on sort of cue to end this year, but like I said, you look at the resources, and in measured and indicated, there's 2.2 million ounces still at 1.8 grams. So it's decent. It was a sort of a bigger mine with a few satellite pits kind of feeding into it. Now, the company added that they tried all these exploration targets. None of them turned out to be kind of too fruitful. They hadn't really spent much last year, and not an awful lot the year before either on exploration. But if you do go back on the Goldfields website, which hasn't been granted updated in too long. I take it this is from the sort of 2018 timeframe. They talk about mineral reserves being depleted by 2031. So there's ounces there, and I dare say they knew that this mining lease was wrapping up in 2025, hence they haven't invested heaps of capital because they had some sort of inklings that something like this would happen. So it's not black and white as to what the future of this would actually look like, but there's clearly gold in and around the area.
So what was the background on they thought this was going to happen? There must have been some lease dramas for a while.
Yeah, absolutely. So December 2024 last year, they submit an application to re-extend it. They had, like I said, received a 30-year lease almost 30 years ago. It's due to expire April 25, where we are today. In that annual report from last year, there was a couple interesting comments. So they say that they sort of discussed that they're pursuing or would look to pursue all avenues to extend the lease, as you'd kind of expect. And they actually specifically mention international arbitration, if necessary. Now, this week, the Minerals Commission, the sort of applicable body that looks over this stuff in Ghana, rejected the application. They told Goldfields, stop all your mining. You need to be by tomorrow off the site. It needs to be vacant.
Nice.
And the company said they'd complied with that order. They won't be there as of tomorrow. So then kind of what next is the question to ask. And the government hasn't specifically said why they didn't accept the mining lease. And, it's kind of par for the course. If the company meets all the necessary requirements, you extend it. That's how things normally work. And Ghana, by and large, is held in high esteem than a lot of its sort of neighbouring countries. People have sort of called it by African standards, a good jurisdiction to operate in. So it's pretty interesting on that front. The government wants to take the reins of this mine. It's very clear. You can go on YouTube and there's these sort of videos with a couple hundred views where the CEO of the Minerals Commission and other videos with the Deputy CEO of the Minerals Commission are specifically talking about this mine. They're saying they're going to honour all the existing contracts. Nobody's going to lose their jobs, but processing will continue. And there's a sort of strong focus on Ghanaians being the one that benefits from this. And they pushed back on what Goldfields said in one comment. They said Goldfields didn't meet all the requirements, but they didn't go into any great detail on what kind of requirements, other than saying there's no reserve. But that kind of goes hand in hand. Why would Goldfields put a reserve if they don't have confidence that they're actually going to mine it? That doesn't really make sense. But that was the only real specific point that the government pushed back on. They did add that they want a better deal for the Ghanaian people, as you'd kind of expect, right? Now, there's a bit more going on Ghana, so I'll take a step back for a moment now, because there is much, much broader action happening, and Ghana's not some like tiny little gold producer. It's the 6th biggest gold producer on the planet. They produce a tremendous amount of gold by global standards, and they just created this body called GoldBod, which is now going to be the sole authority to buy, sell, assay, export any gold from small-scale gold miners, right? So this isn't including your Perseuses of the world and your Anglo Golds and others, but they want to organise artisanal mining in the area, and they were pretty punchy about this. They said any foreign nationals tied up in small-scale artisanal mining are going to be booted out the country. They lifted the growth and sustainability levy for major mining companies as well, so that is the big guys. That's lifted from 1% to 3% of gross production. And
so like a royalty, effectively?
More or less, yeah. And the finance minister said in Parliament that the government must leverage rising gold prices to boost revenue for national development. Now, interestingly, what we would call the opposition leader pushed back on this and said this is going to have an adverse effect on the resources industry in our country. So it's getting a bit punchy over there. They sold, as a country, over $11 billion of gold last year. Half of that came from artisanal mining.
Wow.
Jesus Christ.
That is a huge, huge amount, which the government isn't getting a clip on.
Wow.
So that is why they're getting pretty punchy, and they want their share, as you'd kind of expect. And the story, as it relates to Goldfields, gets a bit more complicated because, as you guys might remember, they own the Tarkwa mine in Ghana as well. This is a beast. This pumps out over 500,000 ounces per annum, and they want to form this into a joint venture with Anglo Gold's Idea Prem. So this was mentioned back in 2023, and clearly the Ghanaian government have this as leverage. They need government approval to join up these two mines and to press on with the expansion at this operation that alone has 11 years of life at 500,000 ounces, right? This is huge. So I would imagine Goldfields are just viewing this, having to give up the license for the other operation, Damang, as the cost of doing business, right? Because this is really the golden goose that you don't want to give away. You want to stay on the right side of the government.
Yeah, right. That's it's interesting that they're going after the mining companies and the locals as well for the clip.
Yeah, absolutely. I think that really leads me to my final thoughts on why I find this super, super interesting, because some people might not be all that bothered by this small mine, relatively small mine, owned by a South African company in Ghana. That's fair enough. But I feel there's a lot more to this story, because nothing happens in a vacuum. And as an investor, you need to be reading the tea leaves about what's going on, because we've seen it in Mali. You're seeing it now in Ghana, in a jurisdiction that people thought was was safer. And these things, they don't happen in isolation. Just like companies look at what their neighbours are doing next door, governments do the same. And with the gold price going through the roof, there's horrific youth unemployment in Ghana. Artisanal mining has damaged more than half the rivers in the country. There's a lot of reasons for why they want to get a hold of this, get the cash in the door, and look after their people as well as look after themselves. Kind of no surprise on that front. But
there are the unintended consequences along the way of just like, other companies who are thinking about investing in the country all of a sudden think twice. Yeah,
absolutely. And clearly Damang isn't a world-class asset. It's not going to be a massive blow to Goldfields' cash flows. There would have still been value. I mean, just processing the stockpiles. Imagine if it's 50,000 ounces of ore that's already been mined. Like we're talking $100 million in cash flows. So that alone, not to mention what you'd sell a 5 million tonne per annum plant for with gold in and around the area. There is value that they're foregoing here, but it was very, very noteworthy that Goldfields in their announcement yesterday made no mention of international arbitration.
Trying to keep it...
They want to keep it cordial. They want to keep the relationship with the government all kosher because they know that Takwa is way more important for them and they don't want to build up any animosity with the... I mean, this is my assumption and I think it's the most kind of obvious assumption, right? They want to stay on side with the Ghanaian government and make sure that the big one they've got is in good hands and they're going to have to forego a little bit. But yeah, with gold prices doing what they've done, I'm not going to be surprised if we start seeing more things like this all around the world. It's just par for the course. And yeah, in a sort of environment of like resource nationalism, you see more and more of this when countries are doing it hard, when they've got debt that they owe the IMF or the World Bank or all this sort of stuff. They're going to twist the levers that they can.
Well, I think resource nationalism was already happening a lot in Africa before the gold price started ripping, so it's probably going to be even more heightened now.
Yeah, 100%. It's happening in South America as well. You look at what Chile did to the lithium sector. It's all around the world.
The tricky thing, I say tricky thing, but it's like the thing to be cognizant of is like when regimes change based on the good times, then you really hinder that industry in the normal times. Think of Queensland and the coal royalty change, right? So the good times came, making super profits. Oh, we're going to jack up these royalties to absolutely onerous levels that progressively get higher and higher as you make more money. And now, like as coal prices moderate, it becomes really hard to have just free cash flow. So you don't want that to happen just because it's good times right now in the gold sector.
Yeah,
definitely. Yeah.
Oh, good. Mate, I reckon your prediction is your analysis is spot on, JD. That is definitely what they're doing.
Thank you, Matt.
Get you in the corporate team.
It's one to watch for miners all around the world, I reckon.
Yeah. Love it. You could create JD's mind map of international relationships.
I'm sure there'd be people a bit
you've
more
already done
switched
your
on.
M&A Howlers one. That could be your next project.
We met some cracking folks in South Africa who do this, but they keep it on the very hush-hush and they maintain those relationships.
Don't want to give you trade secrets away.
No.
Well, you get it for free here. Why not? All my dartboard predictions. Oh, love it. Righto, thanks to all the bloody partners. GRX tickets. Mate, use the code, come to Brisbane with me, and we'll bloody have a beer and talk tech and innovation. Because that's what I do. I talk tech and innovation with people. I'm a trusted source of it. GRX Conference, Brisbane, May 2022. Discount code in the show notes. Great partners. These people are sensational. MMS, Grounded, Sanded Ground Sport, CRE Insurance, K-Drill, WA Waterboarders, Quattro, KCA, Black Diamond Drilling Services, and Cross Boundary Energy.
Hooroo. The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.